Right now, the live intraday price for Palantir stock is trading at $176.22, showing a strong gain of plus 468% as of this morning's session. The immediate takeaway here, and the thing that's really catching the market's attention, isn't just the sheer size of the move, but the context behind it. Palantir just announced a massive new strategic partnership with the UK government, a deal that's been in the works but is now being solidified with a commitment to invest up to £1.5 billion in the UK. This isn't just another government contract. It's a statement. It's a clear signal that the company's enterprise and government-focused platforms, especially its Gotham and Foundry products, are becoming more entrenched in critical national infrastructure beyond just the United States. This goes far beyond the typical daily chatter about a new contract here or a small win there. It fundamentally changes the narrative for many investors who have been waiting for validation of the company's long-term international growth strategy. The general expectation for Palantir has always been this: a highly speculative, high-growth name tied to big data and artificial intelligence, with a business model that's often seen as opaque and hard to understand. Many people view it as a binary bet. Either it becomes a dominant force in government and commercial software, or its unique and often controversial approach keeps it from scaling in a predictable way. The common refrain you hear is that its reliance on large, lumpy government contracts makes it too volatile. You see this reflected in the analyst consensus, which often has a hold rating, and in the wide range of price targets, from a pessimistic low of $5 to an optimistic high of $200. This is the tension. This morning, that reality of a new, significant, and strategic international partnership directly challenges that narrative. It suggests that the lumpy government business might be finding a more stable, recurring rhythm, and that the company's influence is expanding globally in a tangible way. It's not a small, one-off project. It's a foundational partnership that could be a blueprint for similar deals with other allied nations. This is the kind of insight that forces you to reevaluate the core investment thesis. Zooming in on the trading dynamics, this morning's move isn't happening in a vacuum. It's driven by heavy institutional interest. We're seeing reports of significant purchases from firms like Park Capital Management, and this is on top of the already substantial holdings from institutional giants like Vanguard and BlackRock. When a stock gets this kind of backing, it's not just retail traders on a message board. It's big pools of capital making a calculated bet on the long-term viability of the business. The volume today is notable. Already over 19 million shares traded this morning alone, which, while not a record, is a strong signal of conviction. The stock opened higher, gapped up, and has been consolidating those gains, showing that the initial excitement wasn't a flash in the pan. The intraday low of $169.39 held strong, indicating that buyers were stepping in on any dips. This is a classic example of positive news driving a sustained price discovery event, where the market is trying to figure out what the new, higher valuation should be in light of this fresh information. Contrast this with a stock that might have a quick pop and then fade. Palantir is holding its ground, and that's telling. We're seeing this play out while broader market indices are also showing strength, with a lot of the enthusiasm centered on big tech and AI names, which benefits Palantir by association. The general market sentiment is leaning into growth and technology, and Palantir is a prime beneficiary of that theme. The business model of Palantir is what makes it so different, and for some, so difficult to analyze. The company develops and deploys sophisticated software platforms that help organizations manage, analyze, and make sense of vast amounts of data. Their two main platforms are Gotham, which is primarily for government clients, and Foundry, which is for commercial enterprises. Gotham is used for everything from counterterrorism to disaster relief, helping government agencies connect the dots from disparate data sources. Foundry is similar, but it's applied to corporate challenges, like optimizing supply chains for a car manufacturer or streamlining operations for a pharmaceutical company. The genius, or the controversy depending on your view, is in their approach. They don't just sell a product. They often embed their engineers and consultants with the client to build a solution from the ground up, a hands-on approach that makes their relationships sticky and their contracts very lucrative. The downside to this is that it's not as easily scalable as, say, a traditional SaaS business that just needs a few lines of code to integrate. This is why news like the UK deal is so significant. It validates that their model, despite its complexities, can indeed be a foundation for large-scale, long-term partnerships. When you look at the financials, the story gets even more interesting. Palantir has been consistently growing its revenue, with the most recent report showing a significant beat on both the top and bottom lines. They've also been consistently profitable on a GAAP basis for a number of quarters now, a huge milestone that many of their early critics said they would never achieve. This profitability is a critical shift. It changes the conversation from "will they ever make money?" to "how fast can they grow their profits?" The company's focus on expanding its commercial client base, particularly in the US, has been a key driver of this profitability. They've been signing more and more smaller, quicker-to-close commercial deals, which helps balance out the longer sales cycles and bigger contracts on the government side. This is a dual-pronged strategy that seems to be working. A lot of retail investors are interested in stocks like this, names that are in the public eye. Many are using platforms and services for online investment, whether it's through a traditional Fidelity brokerage account or something more modern like a Robinhood app. This increased accessibility to self-investing has put stocks like Palantir on the radar of a new generation of traders and long-term holders. Looking ahead, the future for Palantir stock hinges on a few key factors. The most obvious is the continued success of their commercial business. Can they continue to scale Foundry and move from these big, custom projects to a more standardized, repeatable model? They have a clear path here, but execution is everything. Another critical piece is their expansion into new markets, and today's news with the UK is a huge step in that direction. We should be watching for similar announcements with other international governments or major corporations. The company has a unique position in the field of artificial intelligence, not as a chipmaker like NVIDIA, but as a software provider that helps organizations use AI to solve their most complex problems. This positions them well to capitalize on the ongoing AI boom. However, there are risks to consider. The government business, while profitable and stable in many ways, is always subject to political pressures and budget cycles. A change in administration or a shift in government priorities could impact their contracts. Competition is also a factor. While Palantir's platforms are highly specialized, they face competition from a wide range of companies, from traditional defense contractors to tech giants building their own internal data solutions. There's also the ongoing debate about the company's valuation. With a P/E ratio that is still very high, the stock has a lot of future growth priced in. This is the classic tension between a company with a strong narrative and a valuation that reflects incredible future potential. When you're using a Schwab Intelligent portfolio or doing your own research on various investing sites, you have to weigh this. The expectation is that they will continue to deliver phenomenal growth. The reality is that they have to. Any stumble in revenue growth or profitability could lead to a sharp pullback. As for a broader market context, the current environment is one of cautious optimism. The Federal Reserve is signaling that they are managing inflation well, but the specter of a recession still lingers. For a company like Palantir, which serves both the public and private sectors, this could be a mixed bag. Government contracts might provide a steady stream of revenue even during a downturn, while commercial spending might pull back. The interesting thing to watch is how their focus on efficiency and data-driven decision-making appeals to companies looking to cut costs in a tougher economic climate. That could be a surprising growth driver. You also have other investment platforms like interactive brokers that are used by more active traders who are constantly looking for catalysts and news like this UK partnership to make their next move. All of these factors come together to create a very dynamic and often unpredictable trading landscape for a stock like Palantir. The story isn't a simple one, and that's precisely why it commands so much attention. Comment below and tell me what you think is the biggest long-term risk for Palantir stock: a slowdown in government contracts or increased competition in the commercial sector. In summary, the expectation for Palantir has long been that of a promising but highly speculative technology company with a business model that is difficult to scale and dependent on a few large government clients. Today's reality, however, with the announcement of a multi-billion-dollar strategic partnership with the UK, directly challenges that narrative. It suggests that the company is successfully expanding its international footprint and that its lumpy government business is evolving into a more consistent and predictable source of revenue. The stock's strong performance today, backed by institutional buying and solid intraday volume, shows that the market is beginning to reprice the shares based on this new information. While the valuation remains a point of contention, and the company still faces risks from competition and political headwinds, the recent moves and strategic wins indicate that Palantir is building a more resilient and geographically diverse business than many had previously given it credit for. The tension between its high valuation and its very real, tangible growth is what makes this a stock that you simply can't ignore.